JP Eggers, you've been studying management for decades of these technology companies. The goal for Twitter into the IPO, avoid the Facebook mistakes, bring down expectations. Will it work?
I think it will to some extent. I think already expectations are lower because of the experience with Facebook, and I think Twitter has done a very good job of being very clear that they want to try and have a slow growth trajectory here, work things out over time, and kind of build their portfolio of technologies.
So how does this company, Twitter, change from what we know once it becomes a public company?
Yeah. Well, and the biggest change we typically see for technology companies when they go public is a change in innovation. So typically pre-IPO, all the innovation is driven internally. It's mostly done by their own R&D staff and own developers. And the instant they go public, the normal switch is to go into M&A kind of mode.
You're one of the best people in the world on this. History at Amherst and then on to Wharton and a PhD. Why do, it's like marriage. I'm sorry. Things, you get married. Sarah, you get married and
yeah, tell me about
change.
it. I want to know.
Things change. What is it about going public? You wake up Friday. Why is Twitter different Friday from Wednesday?
Well, I think it's a lot about the degree of disclosure and the degree of expectations and the role that those expectations play on the corporate executive. Before you go public, the list of people that you're responsible to as the CEO is relatively small. And the instant you go public, you both have a much broader responsibility through the board to shareholders, but just to the shareholder community and
Does
the analysts.
Does it sound like a marriage counselor? You know, I'm sorry.
Well, you made the point that once it's a publicly traded company, they switch into M&A mode. The interesting thing here with Twitter is that it's already been a very acquisitive company. It's purchased the largest number of deals, fourth largest number of deals after Facebook, Google, and Groupon, according to some data.
And the largest privately held acquirer of all time. Yes, absolutely. They've been very acquisitive at this point in time.
What will they do differently once they're public, then?
I mean, honestly, I don't know that they're going to. They've already kind of clearly moved into this new mode of going into the M&A mode, and the question is, you know, they just need the capital in order to actually be able to continue to fund that over time.
Well, whether it's advertising or acquisitions, really what Twitter has to prove is that it can monetize and make money because it's still in a loss. One morning must-read, my morning must-read today, comes from the Wall Street Journal. Andy Kessler, former hedge fund manager, author of Eat People, about Twitter's gambit to revolutionize advertising. Thought this was really notable because he distinguishes Twitter from Facebook and others, saying it enables a conversation among a group of users. The bottom line for companies then, as any marketer will tell you, is word of mouth is the best way to sell almost anything. I doubt it'll be like Doritos or Bud Light, but big ticket products and services that require a discussion before purchase, like a gas furnace or car insurance. Do you agree that Twitter has a unique value proposition when it comes to courting advertisers?
I certainly think that they do. I mean, the level of engagement and the kind of the consistency of the engagement there versus Facebook is very, very different, and the types of interactions. I do think that they run the risk on the advertising side of falling into the same Facebook plan, which is they can attract the interest from users because they are a fun, safe environment to be in, but the minute the advertising starts to take over, it gets harder and harder to keep them there.
Professor, you're sitting with the Twitter crew in New York. They're having lattes with you down at NYU. And you say to them, this is the company you need to be like. Which is that company? Do they need to be like Amazon? Do they need to be like Facebook? Or do they need to be like Al Mullally's Ford Motor Company?
Honestly, I mean, there are many ways in which I think that the model for me would have been, I would have said Craigslist. That they actually don't need, they're not a company that needs the huge assets and the huge investment. They could have been very successful, I think, by staying either private or staying smaller and keeping a strong user base. Yes, generate some advertising revenue to more than cover expenses. But there was no burning reason to grow rapidly from an outside revenue perspective as much as a user perspective.
What changes to the management when a company goes public, because they are now starting to calculate their net worth and their fellow colleagues' net worth as well? How does that change what they do in terms of managing the company 4 years down the line, 10 years down the line, if even that far off?
Well, one of the big things that typically happens is that there's going to be an exodus at some point in time. There's a lot of people that come in who like startups, they like that environment, and they love being in that space. They were there to kind of make sure that they could cash out, and once they can actually get out based upon the deals that they sign, they're going to be moving on at some point. So there's going to be a significant amount of turnover, especially on the tech side within Twitter over the next 5 years.
The engineers, merely.
I'm sorry?
You're talking about the engineers?
Especially, yes, the engineers.
What do you see from your students right now? All this tech mumbo jumbo, which tech thing is driving your students right now?
I mean, Twitter's still been very much the big one at this point in time. I think most of my students at the mid-late 20s have moved on past Facebook at this point. So yeah, they're onto Twitter at this point.
But isn't the advertising world and the advertising dollars big enough to accommodate all of them? We act like it's Twitter or Facebook or LinkedIn.
I think there absolutely is as far as the advertising side is concerned. But the reality is these are network-based businesses, and so the more users that are on them, the more valuable that they are. And so the market tends to shift towards one or the other at any given point in time. So there's enough money around there to do that, but I'm not sure that there's enough users that are going to segment themselves to allow that to happen.
Well, Twitter has, what, 200-something million users?
Yeah,
Facebook has
a zillion billion.
1 billion plus
Would
users?
you predict that Twitter will go to Indonesia, will go to China, will go to the geographies where
they
Facebook
have a Twitter in
so
China,
well?
it's just not Twitter.
Exactly. They're already there to some extent in these places, and I think absolutely they're looking for growth from that perspective. I do think the concern about censorship and things like that will become big issues.